Hi and welcome to the Market Alert for Tuesday, the 2nd of February 2020. Starting off with the stock market in the first part of the alert. Morgan Stanley reckon the correction has arrived and it's likely to get worse and feel bad. As here, the blame game has already started, as I said it would. It says the aggressive short squeeze strategies employed by certain groups of investors, obviously referring to the Reddit mob, as they've become known, and the Wall Street Bets Brigade, was the spark. They don't like it. Well, I think as Corporal Jones said in Dad's Army, they don't like it up 'em. And this is certainly the case here. And I've said before, they're going to get the blame for any sort of correction in the market, creating instability and uncertainty, etc. Because that's what these bankers do. That's what the central bankers do. And if they manage to pull off the silver trade, then of course they create banking issues, not necessarily a collapse, but big issues. Then it will be blamed on the small people. More freedoms will be taken away, as far as financial freedoms, that is, and restrictions imposed, because that's the way it works. Implied volatility moved lower yesterday because they did manage to move the market back to the upside there. 22.35 from 25.08 from Friday, but remaining above the average line, and still, as the Morgan Stanley chap says there, a correction in progress at the moment. And there you can see also we're still red on the implied volatility here as well. So let's have a look at the stock markets first. We'll start off with the Wall Street Dow Jones, and we can see that prices have moved down to 89% of this move, this high to this low, and then found support and started moving back to the upside. So even though he's talking about the correction has started, we're going to see how far back this market's going to come before it shows weakness in order to move lower. So I'm going to have a look, see if we can measure this from this high to yesterday's low. So from the high to the low with the fib tool, these are the areas of resistance as the market moves back. But watch between the 62 and 78 with the 20 bar moving average there as well. So if you trade the Dow, they are the areas of resistance should prices move higher. Now let's have a look at the DAX. And let's start off with the daily chart too. Again, we can also see from this low to this high, we're in the 78% retracement area there, where prices found support yesterday and then moved up. And again, you can see the buying there, as well as they took the short side took profits, bringing the market back. So again, what I would do here, you've got an option actually. You can either go from this high, or this high. So what you've got is well, let's discount the middle one here. You will either choose this one or this one because they're more or less the same height. So let's go for this one and this one. And we can draw two sets of fibs in here to measure back. We've got a sort of a medium term and a longer term run back to the high there. So let's start off with this one here. So from this high down to yesterday's low, this gives us this set of fibs here, and we can see the market's already through the 38 and the 50. So let's keep things as clear as possible and just have those three on there. I'm just going to save this, and then I'm going to draw in another set of fibs from here to here, just to see if they converge anywhere along this upside trajectory. And yeah, again, you can see here at the 20 bar moving average, we've got a 62 and a 78 as well. So if we get through this first 62 from here to here, then we're going to bump into these two here, which is at the 20 bar moving average as well, which will need to be driven through if prices are to move higher. So again, keep these targets in mind and even transpose them onto the intraday chart as well. Now yesterday, I haven't got the recordings for yesterday. I was bogged down in trying to see whether they're going to actually pull this move off in the silver market or not. But you can see yesterday that the market found support, and then we had a couple of sell signals to the downside. The first one's just to the scalp, reversing. Then we had a second one trading down to the 200 MA, and we see them buying back here. And then eventually we moved back to the upside, and then we had a run up to the high as well, and on this particular trade taken out just as prices closed back below the 5 bar, but they did switch back and close back above, and then headed for the high of Friday, where the market ran into trouble, which we can see here. You've got prices coming down, going back to 78, 89%, and then starting to move lower. And then we had the sell back down to the BRN and the 200 MA there, before prices then made another attempt back up to the high. And then in the morning, you can see prices continuing to move up. They actually got above the high, and then the high became support, which you can see here. And you'll see the spike in the green there, and the same here. You've got these greens holding it at these levels. And then if you were to draw in the fib retracements from this high to this low, and I'll just drag these across, you will see the market coming back to 89.78 at this level. So get rid of that, and then you'll see the same thing as from this high down to this low where the market tested, and again you'll see prices coming back to the 78.89 level there as well. So the market again during the mid-morning trading through these fib retracements, and then in the afternoon we had a sell from the off, not too dissimilar in its action as the morning. The market coming back again, bouncing off the 200 MA, and again running into the high as it did in the morning session. Prices are moving lower. You get a big spike to the downside. You then get a retest at this level and more fibs here. So we're getting 78 back up to here where we get a double top back 78%, and then off back to the high again. And at the high we also get this same effect here where we've got the market coming back. We've got an increase in volume there with some potential weakness, then the market going through the 200 MA on an increase in volume, and then finding support just after 4 p.m. You can see them buying back in there, and again fib retracement through the drive through the 200 and drive through the high, hold at the high even though there's some selling. Market reverses on lower volume, prices back up to the BRN. So there's the consistent pattern that we see every day with regards to the price action in the 2-minute DAX there. So let's have a look overnight. Prices have moved higher, as we can see here. So I'm just going to compress the prices down so we can get an idea of where we are in the bigger picture, which we'll have a look at again in just a second. So we started above the 200 MA and the DP, and so far in the chart prices have held at the 200 MA and still holding here as well, and you'll see them buying off this level each time. You'll see a pickup in volume. So we're already above yesterday's high, and I want to keep the momentum moving to the upside. So what have we got? So the R1 is 100 points away at the moment from the current price, which is just above the high there. So let's have a look at the daily charts, and that's R1 level. Let's have a look, is going to be 802. Go back to the daily. 802 is where I spoke about earlier, of that 804 to the 859 level. So there's the roundup of the stock market where you'd expect prices to trade to. On the downside, of course, we're going to have the DP before we get anywhere near the low as well. So at the moment, it's looking like they'll want to try and move the market up. But if they fail to do this, and as the Morgan Stanley chap says, and they actually move the market through the 200, they're likely to head down towards the DP. And it's a long way off for the previous day's low, which you can see down here. So that would take some moving to the downside. It would be 100, 200, 300, 350 points down to yesterday's low, which would be a damn good trade. But it'll take some doing. So at the moment, they're still trying to keep this market moving back to the upside. Okay, that's it for part one. Part two, we're going to have a look at silver and as actually, just before I do that, just coming back to the blame game. As you'll see here, that I noticed that the Financial Service Committee to hold GameStop hearing on February the 18th. The hearing is titled "Game Stopped: Who Wins and Who Loses When Short Sellers, Social Media and Retail Investors Collide." I don't think collide is the right word. I think is force the big guns into a corner. They're the ones who lose. They don't like it. And of course, they've got the power of the government on their side to stop this sort of activity, which I've spoken about before. And this is going to be the same in the silver market as well. So yesterday we saw silver moving higher. We had the squeeze of the physical silver shortage versus paper silver. And this is a really good article, actually. I would recommend you have a read of this one. There's a lot of detail in it. I was going to go through it, but it would just make the video too long. So I agree with what they're saying here. This week may be the most interesting week for silver savers and investors in decades. The questions asked by this movement are of huge importance to the whole financial and monetary system. They are. But I have to say, I'm actually quite pessimistic about this one being pulled off. Given the fact that I hold physical silver and have done since 2016, I own ETFs and also spread bet positions, as you know, and I've traded silver options from 1993. It's just that the manipulation, and also combined with the power that they have, is going to make it very, very difficult. Here, the CME hikes silver margins by 18% because obviously the increase in volatility. And this is I think this is the one I was just talking about that I would suggest that you actually have a read of, or is it this one? Oh no, this is the physical premium paper hits record as silver market tears in two, i.e. the difference between the paper market and the physical market. And you can see that here they're all sold out, and if you go to bullion buy post as well, you'll find the odd coin that is available. It says from £23 there, but you won't get it for £23. You click on these and you'll see they're £62, the bits that are just left lying around on the bullion buy post site, but you'll see all of them out of stock. The main ones that I've bought in the past are these Britannias. They're all gone. They're at £49 now. I was paying $15 back in 2016. But my reason for buying, as I mentioned yesterday, was for the potential of a reset of the debt, coming down the line, because this constant printing of money. I know that the silver market is manipulated. I know that they're using the papers to slam the price of silver. But unfortunately, as you can see here, the premiums on the compared to the actual futures market are massive. So the only way they're going to pull it off is, in my opinion, is that all of the physical silver will have to continually be bought, and some big players are going to have to come in and force the COMEX to actually honour delivery. Now, there's somebody on Twitter, which I don't have the tweet for, has said that they will actually follow through on the purchase of a contract and force the hand of the COMEX to deliver the physical silver. Well, he's wasting his time, because futures contracts you don't have to take delivery, and the exchange, again having the upper hand, can actually settle in cash. So we'd end up having to hand over US dollars as opposed to handing over the exchange handing over the physical silver. So whilst I would love to see it come off, I'm certainly erring on the side of caution. And yesterday afternoon, I was chatting to a friend, and I said 2:30. I said, get ready for the slam, because this is the same pattern that we've seen for years. As soon as the Dow opens, they slam the price down. If the Dow goes down, then so does silver. And yesterday afternoon, this is precisely what they did. They hammered it down $1.50 all the way down. It did find some support down here, and of course we've got this gap here as well that we need to fill. Whether it's filled on the downside before we fill this gap and then we move back to the upside, who knows? But like I say, I mean, you can see what they're capable of doing. This is just day one. So if they want to crush the futures market, and if everybody's piling into SLVs, then they're just going to get murdered. That's the way it works. So if the only way they can do it, as can be seen here, and this is encouraging because we're actually seeing the sellout of the physical. But we had this last year in March as well, when the arrival of the virus, and also we had to ship gold from the UK over to New York, fulfilled the gold deliveries because they didn't have enough in the US, and it was flown over by military aircraft from London. So we'll see. I mean, it is different, but like I say, I don't wish to sound the prophet of doom, because I'm not. It's not in my nature. I know the power that these banks have got in crushing, individuals. But collectively, maybe we've got a chance. My opinion, if I was to look at this technically, if I can find the chart, let's go to the monthly chart. I will be intrigued and probably more convinced that it can be pulled off if the futures prices can get above the $49.50 and the $50 from 1979. I also agree with the article that I mentioned here, this one here, where adjusted for inflation, the silver price should be $600. That's the only sort of optimistic aspect of this that I have, that it is seriously undervalued, which is why I bought 5 years ago. That I agree with, but it's the manipulation is the issue. And again, if we can just, it depends, on buying the physical. It depends whether, again, that they ratchet up the premium so high that people won't want to buy. So again, like I say, it's a tough one. I'll start to believe in it if we can get through $50 an ounce, the all-time high from 79 and 2011. If we can get through this, then I will say yes, then it's going to be possible and get enough momentum behind it. But at the moment, I think we're in for a bit of a rough ride with crushing this to the downside, certainly to fill this gap and to try and put a lot of people off actually participating in the markets, particularly the SLV, because that will destroy a lot of people thinking that they can come into this market like GameStop and just move the market to the upside. It's a completely different market. We're dealing with the world banks, the IMF, the Bank for International Settlements, and every central bank who do not want the price of gold and silver to go up, because it will expose their QE printing for what it is, the charade that it has been. So this is a tough one. This is not a simple play like a hedge fund that's 100% short on a stock. But let's see. I hope I'm wrong. But you can see from the daily charts, at the moment the market's not, it hasn't spiked up overnight with Asia trading or anything like that. So I don't know. We'll have to wait and see. I'm optimistic, but cautiously optimistic. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.